Sims Metals had one of its best days in ages yesterday, so a bit of give back today. And Orocobre, maybe this is where we should bring in Julia Lee, shall we, from Bell Direct?
Great idea.
I know that she's been watching this one. Yeah, welcome, Julia. Orocobre, something to do with Argentina and export duties. What are the details?
Look, talk about hitting a stock when it's down, and the fact is that lithium producers and companies have been under pressure, and that's because the lithium carbonate price is down around about 47% in China from the peaks that we saw in the first quarter of this year. So the price has already been under pressure, and that's true of other battery-related commodities as well, such as cobalt, which is down around about 30% from the peaks earlier this year. And then, of course, today we hear that Argentina, which has been through a currency crisis, it's hit its foreign businesses, and they've seen changes to export taxes in Argentina. So what they're going to do is put a temporary special export tax, and this will apply up to the 31st of December 2020. So it really hits companies that are already producing in Argentina at the moment, rather than those projects which will come online after 2020, and it will be at a rate of $3 an Argentinian peso for each $1 US, which relates to around about an 8% tariff in terms of export revenue. Of course, a big company that it does impact is Orocobre, which has operations and is producing in Argentina. In terms of Galaxy, it does have the Sal de Vida project, but that's not due to begin until 2021. So I don't think that's going to be impacted by these tariffs unless we see an extension of the tariffs. But of course, Argentina and defaults and currency crisis, this is nothing new. It's defaulted on its sovereign debt about 8 times since independence, most recently in 2014, and interestingly with Elliott Management, which of course is an activist investor, which recently also went after BHP Billiton. So unfortunately, the troubles that we're seeing in terms of the emerging markets and the currencies there has extended now into stocks, and we've seen some of those companies that have operations over in Argentina are being impacted.
Yeah, so look, that's the caveat, but we saw a lot of selling across the region today. Julia, you know, if you look at the Hang Seng, it's off by 2.3%, the composite off by 1.4%. So yeah, this is a very negative session here at home as well. I mean, shaving 1% in a day, that's a pretty big move.
It is a big move, especially given that we have seen now 5 consecutive months of gains for the Australian share market. So a fall of 1% actually feels quite substantial, and I went back quickly to have a look at when we last saw a move this big, and you have to go back to about the 23rd of March this year. So it's a pretty long time that we've seen falls of this magnitude, and we did see the region flashing red once again. In terms of sectors, the usual safe havens weren't working on the market. The only sector which managed to finish in the black was the property space. And of course the worst were commodity-based stocks, so that material sector really coming under pressure. But I guess it really does put into focus the divergence between holding emerging markets versus developed markets, because obviously developed markets led by the US has been a fantastic investment. In this year to date, the US stock market, the S&P 500, up 18%, still near those record highs. Even here in Australia, we're up about 9%. But you look in Argentina, the Merval's down 8% in the year to date. The Shanghai Composite is actually down 20% in the year to date. So look, it looks like investors, if you do want international exposure, you have to be quite selective in terms of where you go, because there is a large divergence between the emerging markets and the developed markets. And with this currency crisis, what's developing into a currency crisis in terms of the emerging markets, that divergence looks like it's only going to get bigger.
Julia, just talking about moves on the market today, I mean, obviously, if you look under the hood, there's always interesting stories to be told. But look, we're not in the heated days of the reporting season. So if we look to some of the stories out there today, Transurban, it raised that $3 billion from its institutional offer. Is there anything that we need to know about how the sort of share price performed today that will give us insight into how the market is viewing that whole WestConnex project, which does come with risk?
Absolutely. I mean, looking at Transurban, you'd expect this to be a pretty steady company, you know, increasing the amount that we pay in tolls by at least CPI, if not more. And now it's acquired a 25.5% stake in WestConnex, and that values the toll road at an enterprise value of about $20 billion. The positive from this is that it was done at quite a good price, especially the shortfall price, which was quite similar to the entitlement theoretical price. And look, it means that Transurban will dominate toll roads in New South Wales. I think it puts it in a good place to bid for future projects, such as the Beach Link and the West Sydney Harbour Link. But look, the negatives, I think, are the price, the uncertainty with forecasting the usage of toll roads. And we've seen this especially in terms of Queensland. When you're looking at trying to forecast the amount of users on this, it's a long timeline and it is difficult to predict. And that means the price of the project is quite difficult to predict as well, because you're not really going to get a good idea of cash flows from this project for probably another 10 years, with the third stage of the project being completed in about 2024, 2025. So I think traffic forecasts are central when you're making an acquisition. And I think one of the things that concerned me was the CEO was saying that they did use higher figures than which was released in the New South Wales government initial business case, and that's because Transurban's taking a longer term view. But given the experience with toll roads here in Australia, especially in terms of Queensland, I think you have to put an extra margin of safety there, especially when you're using forecasts on such a long timeline. So look, I'd just be a little bit cautious in terms of Transurban, but the capital raising was done at a pretty good price, and that shortfall price also reflected the strong demand that it saw from the institutions when raising that capital.